Given the fact that Japan has a negative real yield, given the fact that Germany has a deeply negative real yield, is this where things are heading in the United States?
Seems to be going that way. Think about U.S. inflation. Let's say inflation is steady at 1.6 or maybe it goes to 1.7. That's the kind of number you'd have to get to on the 10-year to get to zero. Real yield on 10s plunged by about 20 basis points over the last day and a half. It's incredible. Now it's sitting at, what, 30 basis points on the chart? Could it go to zero? Sure. Seems aggressive to us. We would be tempted to fade it. We think the curve's going to steepen, but the momentum's been powerful.
What do you think, Gershon?
Well, I think that we got to 2% in a very unconventional way. Usually you see equity markets, other risk markets selling off in a flight to quality. Yep. That hasn't happened yet. So if the data does weaken, there's no reason we can't go through, I would even say 1.4% and have negative real.
Well, it raises the question then, the Federal Reserve is set to act. You don't think they should, but you think they will. And if they do you think it will be effective? Do you think it will re-engineer, recalibrate inflation expectations and be able to give us a lift?
Given everything that's happened and how everything that's been done hasn't directly tied to inflation so far, it's hard to sit here with a lot of confidence and say that's going to happen. History would suggest that eventually it's going to end up with inflationary pressures, but it might be a long time from now.
Peter?
I think we're going to realize 20 years from now that low interest rates actually breed low inflation, and that the inflation rate gravitates towards where interest rates are because that's what keeps companies afloat, that's what becomes people's margin level. I think we're going to realize this was a huge mistake. Negative rates were an utter disaster. In the meantime, that's what they believe, so I think we're going to see that attempt. I don't think it's going to be successful.
Peter, many of our viewers have heard that a lot. How does that manifest itself, that disaster? What are we looking for?
In terms of, I think we're seeing it in the European banks, right? 10 years later, after, less than that, I guess, after their crisis, we're still seeing problems with the European banks. I think part of it is this very negative yield. It hurts the banks, it hurts the system. I don't think it creates the growth people saw. In the U.S., one of the manifestations has really been this, big push towards issuing debt, for example, to do share repurchase. Makes a ton of sense for corporations, not necessarily great for long-term growth, but it was the right thing to do. And that's what low rates, I think, enable. They don't really create that, end-user demand anymore. They don't create that incentive for companies to really go and invest because they don't see that end-user demand. So we keep trying this thing that's not really working and thinking it's going to do better next time.